SolarEdge and Enphase were two of the hottest solar stocks for most of the last 5 years, and the companies went on an absolute growth tear, driven by a few things. There was mandates that required that a lot of places you had to put module level power electronics, so a microinverter or a power optimizer, on solar panels that were going onto rooftops, whether that's residential or commercial. So there's a lot of tailwinds behind the industry, but a lot of those tailwinds actually became headwinds in 2023. SolarEdge's stock is down 70% in the last year. Enphase's stock is down nearly 60%. So we maybe getting to the point where there's a little bit of value in these stocks. So I want to go through a comparison between these two today. And at the end of this video, I'm going to pick which one I think is the best investment long term. These companies operate in very similar segments in the value chain in the solar industry, but their futures may be very different depending on how things play out. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And let's start by looking at SolarEdge. This is a look at SolarEdge's inverter revenue, optimizer revenue, and other revenue. So that would be things like energy storage. And you can see that all three segments have grown extremely rapidly. It makes sense that these are going to grow at a similar rate because an optimizer then needs to have an inverter to actually turn the direct current coming from the panel and the optimizer into alternating current, which is what we actually use in homes and on the grid. So it makes sense that those two are kind of growing in lockstep. And you can see that growth has been really consistent. A little bit of a blip in 2020, but that makes sense because we did have the global pandemic and there was a lot of installations that got put off during that period of time. But through the end of 2022, things are going really well and a great growth trend. I'm going to get to the more recent numbers. I'll show some quarterly numbers for both of these companies in just a second. If we look at Enphase's growth really hit the accelerator in 2020 and then into 2021. This is just the microinverters shipped. This is just a number. So 18.8 million in the last 12 months. And then megawatt hours of Enphase IQ batteries, 393 megawatt hours of those. So growth in both of these segments, but much more concentrated in the microinverter market. That's why Enphase is trying to get into things like batteries to try to expand the number of dollars that it can generate from each solar installation. If we look at Enphase's financials, the company almost went bankrupt in this 2016, 2017 range. They got a couple of infusions of capital, some really big partners, and then really took off in 2019. Revenue more than doubled and now up to 2.7 billion on a trailing 12-month basis, and it is extremely profitable. But that's actually changed, and that's what I want to get to next. The reason that these stocks are down as much as they are in 2023 is because of this chart. And I'll show the top first. This is Enphase's revenue and gross profit. So gross profit is going to be not net income, but it's going to be the profit that you're making on each sale. So it doesn't include sales, general and administrative, or things like R&D. But you can see that revenue dropped in the third quarter. They're expecting that to fall even further in the fourth quarter. And gross margin plunged more than 50% as well. This is because of the pullback in solar installations that happened starting in the summer, but really hit in the fall. And we've seen this across the board. So all of the residential solar installation companies said that there was weak demand, partly because of rising interest rates, partly because of changes to California specifically, and net energy metering 3.0, as they call it. But if we go down to Enphase Energy, you can see that the story is very similar. The drop in revenue actually started in the second quarter and then accelerated in the third quarter down to $551 million. And you can see that gross margin number, $262 million, is on the decline. And they also expect weak demand for the fourth quarter. So as we look at these companies, this is sort of the lay of the land. Phenomenal growth up until basically a quarter ago. And that's going to continue at least into the first quarter of 2024. But let's get into a few of those industry dynamics and what to look for in 2024 before getting to valuation. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, the decline in both of these companies was really abrupt in the third quarter, and it will be even probably worse in the fourth quarter. And the reason for that, like I said earlier, is there's just a slowdown in installations in residential solar companies starting in the summer. And then what they're going to end up doing is reducing their inventories. And that's going to ultimately lead to fewer orders for the third and fourth quarter. That's really short term what we're seeing. But long term, the dynamic is a little bit different. I don't think we're fundamentally changing anything about the growth trajectory of the residential solar industry. There's going to be adjustments that need to happen. Higher interest rates need to be factored into financing. Maybe fewer people choose leases and go with loans or pay for cash. But these are dynamics that the industry has gone through before. So, from an absolute basis, I think we will see more megawatts continue to be installed on people's homes. The question then becomes, who takes the margin in each of those installations? And the installers are really going to be the first ones that determine that, because they have made most of their money in the past decade on really financing these projects. But there's less money in financing when financing rates go from 4% to 7%. So now what they're going to have to do is they have to make a choice. Are they going to increase prices for their customers to make their economics work? Or are they going to put pressure on their suppliers? And across the board, all of the major solar installers have said they expect component costs to come down in 2024. Sunrun, SunPower, Sunnova, all of them have said this. And that means that they're going to be paying less for everything from solar panels to microinverters and power optimizers. It doesn't mean that they're not going to be using these products. It means that they're going to say, hey, it doesn't make sense for us to pay 50 cents a watt, let's say, for a microinverter. We're only willing to pay 40 cents per watt for that microinverter. So as a result, the margins for those companies start to come down. And I think that's ultimately what we're going to see in 2024. And I think that's what's concerning, is that the margins that we saw in 2020, 2021 may not continue over the next year. So let's talk about the valuations of these companies, because what we're paying for them is ultimately going to determine whether they're going to be good investments. And I'm going to start with SolarEdge. Just go through a few of the numbers here on a trailing 12-month basis. Price to earnings multiple of 27.5 and a enterprise value to sales of 1.4. That actually seems like a pretty good value. But like I said, those declines really started to happen just a quarter ago. So the future looks a little bit worse. On a forward-looking basis, price to earnings multiple now turns negative to negative 85, and enterprise value to sales multiple actually goes up to 2.5. So analysts are not expecting SolarEdge to be profitable over the next year, and they're actually expecting sales to fall. If we look at Enphase, again on a trailing 12-month basis, price to earnings multiple is 32, and enterprise value to sales is 6. So a little bit higher margin company, you pay a little bit more from an enterprise value to sales standpoint. But on a forward-looking basis, price to earnings multiple 38. So not quite the deterioration that we expect to see with SolarEdge, and an enterprise value to sales multiple of 10. Now, I think both of these companies are going to be facing similar challenges in 2024. So while the long-term future may be bright for these companies in the solar industry in general, I do think there's going to be a lot of pricing pressure. And I do think that we're starting to see already that SolarEdge is going to be the one that's going to be feeling that more than Enphase. The components are just very different. You're going to have more pieces of an installation with SolarEdge. The industry is really trending towards microinverters as a preferred solution, and Enphase has been the preferred supplier there. Now, we may see margins come down, but if the company isn't going to go negative and actually start losing money, then it'll be in a much better position than SolarEdge is. But for both of these companies, I think it's going to be a challenging year. And I wouldn't be surprised if both potentially report losses for the year as all of these dynamics shake out in the industry. I don't think we're going to back to where we were even just a year ago from a margin standpoint and from a growth standpoint. So that's something to keep in mind if you're looking at these solar stocks. But let me know what you think about SolarEdge and Enphase in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.